Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's story with you. We're starting off with a fascinating tale about one of the most successful investors in history, Warren Buffett. As you may know, Buffett has been in the news recently for his views on the market and his investment strategies. But what makes him so successful? Is it his ability to pick winning stocks or his disciplined approach to investing? According to a recent article, Buffett's success can be attributed to 6 core principles that he's followed throughout his career. These principles include insisting on a margin of safety when buying stocks, investing with the mindset of an owner, avoiding the perils of herd mentality, being diligent in his research, and letting compound interest work its magic. But what's interesting is that these principles aren't just relevant to Buffett's own investments. They can be applied to anyone's investment strategy, regardless of their level of experience or wealth. By focusing on the fundamentals of a business, rather than trying to time the market or follow the latest trends, investors can make more informed decisions and reduce their risk. Of course, it's not always easy to stick to these principles, especially when the market is volatile or unpredictable. But as Buffett has shown us time and time again, discipline and patience can be powerful tools in building long-term wealth. We'll be exploring these principles in more depth throughout the show and examining how they can be applied to your own investment strategy. We'll also be discussing some of the latest news and trends from the world of finance and hearing from experts in the field. So, whether you're a seasoned investor or just starting out, tune in to learn more about the world of stocks and finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of global economics and trade today, and I'm excited to share this next story with you. As we've been following the developments in international trade, a significant escalation has occurred between the United States and China. The two economic powerhouses have been engaging in a tit-for-tat tariff exchange, which is starting to have far-reaching consequences for the global economy. According to recent reports, the U.S. has imposed new tariffs on Chinese goods, prompting Beijing to retaliate with its own set of tariffs on American products. This back and forth has led to concerns about a potential trade war, which could have severe implications for businesses, investors, and consumers worldwide. The Federal Reserve is closely monitoring the situation, with Chairman Jerome Powell stating that tariffs could drive up inflation expectations and potentially lead to a vicious cycle of behavior that worsens inflation. Now, it's essential to note that both countries have valid concerns and motivations behind their actions. The U.S. is seeking to address issues like intellectual property protection, trade deficits, and market access, while China is trying to defend its economic interests and maintain its growth trajectory. However, the risks associated with this trade tensions are real, and it's crucial for policymakers to find a balanced and sustainable solution. As we analyze the situation, it's clear that the impact of these tariffs will be felt across various sectors, from manufacturing and agriculture to technology and finance. Companies like DuPont and GE Healthcare, which have significant exposure to the Chinese market, are already experiencing sharp losses. The global stock markets have also been volatile, with major indices like the Dow Jones, S&P 500, and Nikkei 225 experiencing significant declines. It's worth noting that some experts believe that the tariffs might be a negotiating tactic, and that the U.S. and China could eventually reach a deal that benefits both parties. However, until then, investors and businesses will need to navigate this uncertain landscape and adapt to the changing trade environment. As we continue to monitor the situation, it's essential to remain informed and up-to-date on the latest developments. We'll be keeping a close eye on the trade talks and their potential impact on the global economy. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's show, I want to dive into some of the most pressing concerns in the market right now. The trade tensions between the U.S. and its partners have been escalating, and many experts are warning about the potential risks of a recession. Now, I know some of you might be thinking, Lewis, this all sounds like doom and gloom. But as your trusted guide through the world of finance, it's my job to give you the unvarnished truth. And the truth is, the markets are getting increasingly nervous about the impact of these tariffs. Traders are now betting that the Federal Reserve will cut interest rates at least 4 times this year to bail out the economy. That's a significant shift in sentiment, and it's a clear indication that investors are worried about the potential consequences of these trade policies. But here's the thing, the Fed has a tough road ahead of it. With inflation still above its target rate, cutting interest rates too aggressively could lead to even higher prices down the line. It's a delicate balancing act, and one that requires careful consideration. I had the chance to review some comments from Raghuram Rajan, the former Reserve Bank of India governor, who warned that the Trump administration's tariff policy increases the risk of a U.S. recession. He also said that removing Federal Reserve Chair Jerome Powell would be a tremendous blow to financial markets. Now, I'm not here to take sides or make predictions about what will happen next, but what I do want to emphasize is the importance of being prepared for any eventuality. As investors, we need to stay vigilant and adapt to changing market conditions. So what can you do to protect your portfolio in these uncertain times? Well, first and foremost, make sure you have a diversified mix of assets that can help you weather any storms. Consider rebalancing your portfolio to ensure that you're not overexposed to any one particular sector or asset class. Secondly, keep a close eye on the news and market developments. Stay informed, but don't get caught up in the hype. Remember, markets can be unpredictable, and it's essential to separate signal from noise. Finally, always prioritize caution when it comes to your investments. Don't take unnecessary risks, and make sure you have a clear understanding of your investment goals and risk tolerance. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.